What's going on, guys? So in this video, I'm going to be going over why Starbucks is one of my favorite companies in the world right now and why I think that it is an amazing investment. You know, if you have a 10 plus year time horizon, Starbucks, I believe, is going to be an amazing company, an amazing addition to your portfolio over the long term. And I'm going to be going through exactly why I find value in Starbucks and kind of, you know, a holistic approach and then also the fundamental breakdown. So if you guys are interested in Starbucks and finding out more, make sure to stick around. So I first want to explain to you guys exactly my holistic approach to investing in Starbucks. Now, a lot of you are probably asking, Dan, why are you investing in Starbucks? You pretty much only talk about tech stocks. And I kind of wanted to talk about how there's two main types of companies that I invest in. So there are companies like, AMD, Micron, Nvidia, and things like that I think are making cutting edge technology that, in a relatively short period of time, when you think about your overall investing journey, are going to have monumental growth because of their amazing advancements. But then there are companies like, say, Starbucks, that I think are just amazing businesses that you want to own, especially looking out at a long time horizon. So Starbucks is one of the companies that I plan on buying and holding for life because I think that this brand is going to continue to grow. I think the company is always going to have its spot in the world, and I think it's only going to get bigger from here on out. And so I'm going to kind of go through exactly what are the major points as to why I think, just on a broad scheme of things, Starbucks is a great investment. So first things first, Starbucks has one of the strongest brands in the world. So pretty much everybody, when you think of a coffee shop, you almost synonymously think of Starbucks when you go with that. Here in New England, we have Dunkin' Donuts, which is probably the most concentrated coffee shop around. However, in the past couple of years, Starbucks have started to open up, and I've seen firsthand a lot of market share leave Dunkin' Donuts and go to Starbucks, especially with a younger crowd. And I think that when you invest in a company for the long term, you definitely need to see where the trends are going for young people if you want that brand to continue to live, for the next couple of decades. So I definitely love the brand as a whole. Starbucks, I think it's an amazing brand that creates an amazing moat for a coffee shop, and it's something that you can't just easily, open up shop and have as good of a brand recognition as Starbucks. So that's one of my favorite things about Starbucks. The second thing would definitely have to be growth. Now, Starbucks over the past decade or so, ever since the financial crisis, has been aggressively expanding their stores and just making money hand over fist. So if you look at what management was doing, say during 2008, 2009, when everybody else was freaking out, everybody else was constricting, Starbucks was actually rapidly expanding their operations and became the #1 coffee giant in America, in a matter of a couple of years. And that allowed them to become, kind of the staple coffee shop and, the synonymous idea when people thought about, going out for a cup of coffee. Generally, people now think about going out for Starbucks. So one of the other most important things about Starbucks is that they are extremely customer focused. And by that, I mean that Starbucks has time and time again taken feedback from their baristas, their customers, and then other clientele that have kind of voiced their opinion as to, okay, well, I'm not really a big fan of this drink, or I wish you would extend the time frame that this limited edition, say, pumpkin spice latte is out on sale, and they take that feedback and kind of bring it back into their stores. Starbucks is definitely driving to become, the most millennial-friendly establishment. And you can see that from their workplace. They allow people to wear earrings, have tattoos, everything like that. Or, they just allow people to kind of hang out at their coffee shops. And even if you're not spending a lot of money, they still just focus on making the customer experience the best thing. And if you look at other companies that do this, say Amazon comes to mind, Amazon has been focused around only making the customer happy and nothing else. And because of that, in our current society, with everybody just kind of giving their reviews, blatantly about any company that they deal with, customer-focused companies, unlike any other time in history, are now going to probably be, in my opinion, the most effective companies at growing in the long term, and the companies that, millennials currently and then younger generations are going to continue to go back to. So I definitely think that that is a serious moat that takes years and years of really establishing. So that's another great reason that Starbucks is a good company for the long term. So another really important thing about Starbucks is that Starbucks has become a dividend growth beast. And what that means is that Starbucks has been increasing its dividend for the past 7 years at over 33% per annum. And that means that if you've held on to Starbucks for just a couple of years, you could possibly have a 5 or 6% yield on cost. And that's holding a company that still has many years of growth ahead of it, is still rapidly expanding, but it's focusing right now on also not only providing, amazing benefit to its customers, but also giving a lot of investor feedback, because it knows Starbucks is no longer the major growth behemoth that it once was. It's not going up 100+% a year, and they've acknowledged that, and they want to reward their shareholders accordingly. So I definitely think that is something extremely important to think about Starbucks, especially if you plan on holding Starbucks for the long term. And now I've said the term long term quite often when I refer to Starbucks in this video so far, and I want you to know that when I say long term, for these types of companies, I actually mean pretty much for life. Now, Starbucks is a company that is pretty much, they're mature and they're fully grown here in North America, but they're rapidly expanding in China, they're rapidly expanding in other areas of the world, and those will not be fully mature for at least, 10+ years out. So I definitely think that Starbucks has steady growth ahead of itself. It has a business model that works, it has a brand that people love, and it has products that people love. And so I definitely think that, you give Starbucks time, Starbucks will grow as a business as you grow as an investor. And so when I look at Starbucks and adding it to my portfolio, I definitely think that coffee demand, and I think that the luxury-esque vibe that you get from Starbucks is going to be something that is constantly in society moving forward, and it's going to stretch upon any society that you have. So it's a global type of phenomenon. And so I definitely think that Starbucks is the type of brand that you can buy and hold on to for life. And that's kind of my investment philosophy with it. I'm definitely not aggressively buying now, but it's definitely a company that I think that I can continuously put money into, regardless of what's going on in the global macro trend over the next, say, few decades. And I definitely think Starbucks will be a very good addition to my personal portfolio. So to wrap up the holistic approach to Starbucks, I want to take a phrase from Warren Buffett. And Starbucks to me is definitely, when you look at the share price right now, you're not getting a massive bargain, but you're buying a great company at a fair price. And as through Warren Buffett has said over time, he has definitely learned that it's better to buy a great company at a fair price than it is to buy a fair company at a great price. And that's because Starbucks, I believe, has the ability to scale up regardless of what's going on. And Starbucks is definitely something that you don't have to think about, in the next 10, 20 years. I think Starbucks is going to continue to grow in market share. I think it's going to grow in consumer demand. And I definitely think that Starbucks is going to be one of the biggest brands, from here on out, at least for the, the retail and, fast food chain area. So that's kind of the holistic approach, and I'm going to get into the fundamentals of exactly what kind of a value I'd give Starbucks right now and how much potential upside you can expect, over the next couple of years based off their fundamentals. So looking at Starbucks from a fundamental standpoint, it's definitely not a great bargain, let's say, out there, but I definitely think it's not overvalued. So if you look at its current PE is sitting around a 17.5. If you look at its PEG ratio and you include its dividend, as investors like, say, Peter Lynch like to do, you look at their PEG, depending on how overvalued or valued the company is, it sits at about a 1. A 1 flat, it's 1.02. And I definitely think that for the type of brand that Starbucks is and the type of market that we're in currently, I definitely think that getting a PEG of a 1 on a company such as, massive and as well known as Starbucks, I definitely think that's a pretty good bargain. If you look at other, more mature companies, most of them, especially ones that pay a dividend, are sitting around about a 2 to a 3 PEG ratio, because a lot of them aren't growing as fast as Starbucks is. And while Starbucks isn't growing as fast as it used to be, I definitely think that it's significantly discounted compared to the other companies, in this space. So something to keep in mind, though, with Starbucks and why it might be trading at such a low valuation compared to its peers is that Starbucks does have a good amount of debt on its balance sheet. Now, that is mainly because Starbucks is not a franchise like, say, Dunkin' Donuts is. What that means is that Starbucks actually owns the majority of its stores outright. It is not leasing the brand name. It is actually opening up the store itself, and its employees are being hired by the company, not by a franchise owner. Now, what this means is that Starbucks will make a lot more money, especially when we're in good times, like, say, here now in the bull market, than companies like McDonald's and Dunkin' Donuts, off of their franchises, because they own each of their stores. And the reasoning why that adds a lot of debt is because now they have to expand buildings very quickly. They have to buy land, and a lot of that is easier to be done with, say, taking out debt, especially if you want to rapidly expand like they did in China the past couple of years, and that related to a lot of their debt being added on. It should be noticed that they just made a deal with Nestle, and with that deal, Nestle has the ability to sell Starbucks' brand and other products in stores. And that gave Starbucks about $7 billion in cash. And they're taking about $5 billion of it and putting it into a share buyback, an accelerated share buyback at that. And the rest of it, I believe, is going to be used to focus on paying down their debt. And that'll give them a much more reasonable debt to equity ratio. But for right now, that is probably the biggest I'd say red flag when you look at Starbucks, as a whole from a fundamental standpoint, is the amount of debt. Other than that, the company is growing relatively well. Now, taking a look at Starbucks' financials for, say, an income and a cash flow type perspective. Starbucks currently has a dividend yield of about 2.5%, and that dividend is fairly new, but over the past 7 years since they started really, focusing on their dividend, it has been growing at about a 23% rate per annum. So that means that if you've just held Starbucks' stock, regardless of what happened with the share appreciation since this started, you would be having a massive yield on cost just because of the rapid growth that they're going through their dividend. And I definitely think that's because Starbucks understands that, at least in North America, they can count on, the cash flow that they're getting, but they've kind of reached their limit as to how many stores that they want to keep opening. They're definitely not doing what they're doing in China and opening up thousands upon thousands of stores in the store every 15 hours. Definitely not, fast growth here in America, but it is steady cash flow that they have now decided to kind of redirect that directly to their shareholders and rewarding them so. And if you're looking, say, 10 years from now, assuming they're able to execute on that properly in China, you can almost anticipate that the cash flow growth is going to continue, for the next decade or so before it really starts to taper off. If you look at their payout ratio, which is how much of their retained earnings they're, putting towards that dividend, it currently sits at about under 50%, and which is pretty great because now the company is definitely focused on, becoming a more mature company, at least here in North America, and it's not, using the majority of its retained earnings. So that means that the company still has enough money to, work with, if it needs to be aggressive with, paying down debt if we hit bad times, or if it needs to, if it really wants to expand in different areas around the world. But it's still, at an attractive payout ratio. So that means that the company is focused on the dividend, and because it's only 50% of their retained earnings, they have many years that they can continue to grow that, at the continued fast rate that they've been doing so over the past couple of years. And now here are just some other points I wanted to talk about with Starbucks, just to kind of get a feel of what's going on with the company right now. So Starbucks, of its past year, has had its slowest growth rate in its history. It only had about a 3% comp store yield growth year over year, which means that, they were normally experiencing 6 to 7%. So the growth that Starbucks was experiencing this past year has, significantly diminished. And that's why, as you can see from the stock price, that it has kind of gone nowhere over the past year. And now a lot of that is to do, and what management expects is that a lot of that is to do with, they're not executing properly and they're opening up stores that aren't in great locations. They actually just closed 150 stores not too long ago, which created a great buying opportunity for those of you that took advantage of it. People saw they were closing 150 stores and thought that they were, just going down as a company for some reason. But they're focusing on now only creating stores in areas that they know are going to be extremely cash flow positive and, continue to grow over the long term. Now, a couple of other points I wanted to touch upon Starbucks quickly is that Starbucks is definitely at a, kind of a standstill period. If you look at, say, comp sales year over year, Starbucks only grew at about a 3% same-store yield, as opposed to the past few years that it's been about 6 to 7%. Now, 6 to 7% yield for retail chain is amazing, especially in the fast food industry. And, the past year of relatively slow growth and stagnant growth worried a lot of investors, and a lot of people pulled out because Starbucks is no longer the growth story that it once was. But I believe Starbucks, one, acknowledges that due to its, dividend focus. And also, I do agree with the management that a lot of that was to do with a lot of the stores that they were opening up. They were just kind of blindly throwing them out there, and they weren't really focused around the location, which they started to close down the non-cash flow positive stores and open up new stores in more cash flow positive areas. So I definitely think that's going to help with the same sales growth, at least for the new stores that they're creating. And I also want to keep in mind that Starbucks is relatively mature here in America, but that does not mean that it is, mature, say, in China. And now China is definitely its biggest bet for the future. And I personally agree with Starbucks saying that the Chinese economy, especially the Chinese middle class, is going to grow at a much faster rate than the rest of the world. And I definitely think that China's economy is going to be one of the biggest, if not the biggest players, continuing 10 years from now. And so I definitely agree with Starbucks' main focus on looking at China for the long term, not necessarily what happens over the next couple of years or say at the end of this economic cycle. I definitely think by the next cycle or two, China will be an amazing growth story. And because Starbucks is so focused on it right now before all that growth is fully realized, I definitely think Starbucks is going in the right direction. Starbucks also just partnered with Alibaba, and Alibaba is now allowing people to, say, order a coffee and have it delivered to their house. And that is to mainly combat a lot of issues that Starbucks was running into with, they had a really good, focus on, say, big cities and people that, or in big office buildings, and everybody would just be going to Starbucks on their way to work. But now they're trying to expand to people that are, say, outside, they live in a village, or, they're like, say, 10, 20 miles outside of the city, but they still want Starbucks. So partnering with Alibaba allows Starbucks to kind of, acquire more market share in China, even if they're not, even if the citizens, aren't in the, very dense cities. So the two biggest worries, though, with China and, as China being a growth story over the next 10 years is mainly two factors. One, there are other companies that are coming out that realistically, kind of have the same model as Starbucks. They're going for a very new, modern, hip coffee shop design and, just as fast as a process, say, that a Starbucks has with their in-stores, but, with a, say, Chinese name behind them. So a lot of customers, say, might want the more nationalistic version of the cup of coffee. And the other point is that with the growing trade war issues, a lot of people could possibly just not want to deal with an American company if they see, if they start to blame, say, President Trump and all the tariffs going on right now, if they start to blame what's going on at, say, a trade level as to why, say, they either lose their job or anything, if China hits, say, a recession, or they're already currently in an economic bear market, so who knows what that's going to do to their end citizens down the line. If Chinese citizens start to blame, say, America as a whole for that, they definitely might start to veer away from Starbucks, being an American company. However, I do think that the partnership with Alibaba and the fact that Starbucks has been in China right now for about 18 years, I definitely think a lot of that is going to be absorbed through a buffer, and I don't think that people are going to immediately associate Starbucks with America in that negative sense. Now, just the last point that's very interesting with Starbucks is that Bill Ackman actually just bought $9 million worth of shares back in its massive dip, kind of what I talked about when they closed the 150 stores, mainly because he has the same kind of viewpoint on it as I do. He views Starbucks as an amazing brand at a bargain price compared to the overall market. He thinks that Starbucks is one of the best run businesses in the world, and he thinks that Starbucks has, the potential to be a 2 to 3 bagger over the next few years. And that is all focused around its China story. So if you look at, say, the amount of money that Starbucks is generating from its American stores versus Chinese stores, the amount of stores that it has in China are going to eventually meet or surpass the amount of stores that they have in America. And right now, they're not nearly as profitable as, say, the ones in North America. So assuming that they are able to, say, hit the same amount of profitability with their Chinese stores that they're opening up that are in the current American stores, Starbucks actually does have the ability to double or triple its revenue, thus doubling or tripling the company, while maintaining this global dominance in the coffee retail place. So Bill Ackman does have other views about it, but that was kind of his main focus on it, was that the China growth story was very good and that Starbucks, compared to all of its peers, was at a discount. So Bill Ackman is, I did a video here about going kind of in depth of like what he does as an investor, because he's a more activist investor. But having him, being a backing to this company going forward is something that's reassuring to me as an investor, that someone like him had the same kind of viewpoint as I did. And with the track record that he's had, I do feel more reassured. I definitely wouldn't say start my position because Bill Ackman started a position, but knowing that him and I were on the same wavelength when I started my position, which was coincidentally about the time that he started his position, that just gives me more reassurance as an investor. So that's it for Starbucks. Hope you guys liked the video. Let me know if you guys are Starbucks shareholders or if you've been thinking about the stock. Hope you guys enjoyed the video. Hope you guys got some use out of this, and I'll make sure to catch you guys in the next video. Peace.